What is going on? Brand new duplex just hit the MLS in Eden Prairie, Minnesota, and we are going to underwrite it to see if it cash flows. All right, so this sucker just hit the market. It's a side-by-side duplex, split level, which means that there's going to be, you'll come in here, there'll be a stairs down and a stairs up, kitchen, and some bedrooms up here. It's a 8-4, which means it's 8 bedrooms and 4 bathrooms, which would mean that each side is going to have 4 bedrooms and 2 bathrooms. Okay, so 4 bedrooms here, 4 bedrooms here, 2 bathrooms, 2 bathrooms. Okay, we can verify that down here just to make sure that that's what it is. And yes, so unit 1 is 4 beds, unit 2 is 4 beds and 2 baths. 2 baths. Okay, they don't have any rental data on here on how much they're getting for rent. It sounds like it's an agent owned, so they're living in one side and they have a vacant other side. Okay. All right, so it looks clean. 750 initially feels too big for me, like this is not going to be able to cash flow, but let's do our due diligence. Okay, so let's fill out what we know in the spreadsheet to begin with. I have my rental analysis spreadsheet over here, so let's fill it out. So we've got a purchase price of 750. Okay, cost to make rent ready. Let's take a look. Okay, we can have a pretty good idea from photos. Let's go into here. And exterior looks pretty clean. You can see a new window tag there. That's good news. All right, inside is clean. All right. This side is fine. Move-in ready. Okay. And it looks to be pretty nice, to be honest with you. Yeah, these are all brand new windows. Not on this side though. So it looks like this side, which is the vacant side, all brand new windows, still have the stickers on them. And then this side, it doesn't, because this is the side that they're lived in. Nice outside here. All right, close to parks, blah, blah, blah. All right, so let's do cost to make rent ready. Let's just make that lean. Like maybe we need $5,000 because you run into issues. You got to market the property. Maybe you hold it for a month, whatever. All right, closing costs are going to be about 2.5%, probably more now. Let's do 2.5. It's 750, so we're probably going to be okay with that. All right, 25%. Let's just go with a high end. We'll play with the interest rates here in a little bit. They've come down a little bit, but you're probably let's do 6.5% right now on a 30-year. So we got a 30-year AM here. Let's look at rents. Okay, let's do some due diligence, some looking. So I do not like using Zillow to buy houses because they've created too many pages for sale to try to sell ads. So there's going to be a bunch of stuff in there that's not necessarily accurate. That being said, when it comes to rental, things that are for sale on the market, a lot of people use Zillow, so you can really get a good idea of what the rental market looks like. Okay, so we put in Eden Prairie here, and it's for rent. Let's do 3+ beds. You know, leave the bathrooms out. Take house. You know what? Let's put houses in there just to get an idea. We're not going to be doing apartments. That doesn't matter. Okay, let's just keep it pretty light. All right, let's get going here. Is there a map search here? I thought there was map search. Weird. No map search. All right, so let's just take a look here. Okay, so we have a 4-bed, 3-bed. This is a full house. That's going to be too much. 3-bed, 2-bath, 2,400. This is starting to get pretty close, right? Because one side has 3 beds, 2 baths. This is its own building though, so that's probably a little bit skewed. Here's another one, 4-bed, 2-bath, 2,300. All right, full house, 2,400. 23. Here's a side, but here's an up and down 3-2. Okay, so it looks like the market, if you're going to be looking into a 4-bed, 2-bath type of house with a couple of garage stalls, you can kind of see that it's hovering from 2,500 to 2,400. And now none of these are rented. They're actively on the market. So whether or not the market is kind of triggering at these prices or not, who knows? But then we have to take into account that it is a side-by-side. It's not your own house. There is a shared wall. So let's pick the bottom end of what we're seeing here. So let's do a $2,300 number. Okay, let's do 2,300. I think that's going to be on the top side. It's going to be a little top heavy. All right, so 2,300 per side. And so we're going to be bringing in $4,600 a month. No HOA fees. Let's see here. All right, vacancy. Let's do 5%. I think we can be pretty lean with that. And again, the rental market. Let's go to 7%. The rental market's been a little bit longer. Maybe that'll change as the spring presents itself, but right now I think we got to do 7%. Let's do a 10% CapEx, because I think over time we're going to be spending 5,000. And you know what? Let's bring it down. It's been remodeled quite extensively. Management, we're going to self-manage. So keep in mind, if you get a management company, it's going to be 10% of your rent plus 1 month rent most of the time, plus a service fee on top of everything. Okay. So I'm doing 0 because I'm going to self-manage these things. And I pay like, I don't know, 20 bucks a month for this software, but that's skewed out over my portfolio. So it'd be like a $2, $1 for this one. All right, landscape normal, probably $3,000. Okay. Now you're going to try to get leases in place that cover this as well. You put a lease at 2,300 plus, the tenant covers utilities, plus the tenant has to pay for landscape. And then maybe you could get an extra $200-300 a month collectively to cover these things. But like I said, the rental market's been a little bit skinny lately. So let's just put 3,000 to be safe. That gives us, quite a bit of money per month to be extra buffered. Let's say we're paying full cash for this. So capital required is 211. 250. Okay. So we're not paying any line interest. Insurance, you're probably going to be looking at like 3,000. That might be light. Let's look at taxes. We need to get taxes, add that in there. All right. So the tax amount here is 53.47, but then they have a tax with assessment with no assessment balance here. So I'm assuming that there's some sort of street update that added. So this is going to be ammed over 10 years. So I think we can effectively put this at 60, probably 6,500, because we are going to get hit in the future with that non-homestead. Let's make sure. Let's see if it's home. Okay, it is non-homestead. Okay, so these are non-homestead numbers. So we can do 63. Okay. Homestead means that if you live in this, you can get a homestead exclusion where your taxes will come down. It's not a huge exclusion, especially in Minnesota, maybe a few $100s. So it's going to be pretty close anyways, but it is something to be accounted for. Okay, so let's look at this deal as they've got it listed and offered based on our estimates of rent. And we're paying full ask price, $750. We're paying our own closing costs, 25% down, 30-year AM at 6.5%, making $4,600 a month in rent. And this is also assuming that the tenants are covering all of the utilities, okay? They're covering their water, their gas, and their electric, okay? If you add those, this number is going to come down quite substantially. We're accounting for about about 3 weeks a year of vacancy, which hopefully you can bring down, but it's good to plan. You don't want to create ghost cash flow. And then maintenance, if we're setting aside $3,500 a year to just take care of things, considering this has just been updated, I think that's going to be safe. Landscaping, so snow removal and lawn maintenance, $3,000 a year. Insurance is $3,000. I think that might be too light, but it's probably okay. Taxes are exactly what taxes are. And we are making a grand total of minus 3.5% per year. So you're operating a negative cash flow of about $7,200 annually at ask price with these rent calculations. Okay. So let's change the rent up to 2,500. Let's see what that looks like. This is what you do as an investor. How can you make the deal work? That doesn't change it very much. We're still losing $3,000. So let's go back to 2,300. And let's say that we get our closing costs covered. Okay. So let's say that we negotiated 20,000 in closing costs. Okay, so that covers all right. Closing costs, that's going to bring us down to $5,400 loss, getting better, but still not great. Let's see if the purchase price can come down. This is going to be very, very difficult right now, right? It's brand new on the market. There's no way you're going to get 700K with covering 15K. So right here, we're getting close to running a break-even deal, right? So if you're fully rented out, you're making $200 a month. You're kind of holding this property at break even, get ready to cop up some money on a month-to-month basis. Okay, let's mess with our down payments. Okay, so full ask, we got closing costs built in. We asked for 20K in closing costs, and let's do a 50% down payment. All right, now you're cash flowing. Okay, so you bring 50% down at full ask with them covering closing costs, and you'll be making about 1.8%, which is just like too low, right? It's just too low. So this deal, the way it looks to me, does not sound like a good, attractive purchase to add to your portfolio. If you can get 2,500 a month, maybe Not even that, that's bad, right? Bring a ton of money down. See here, let's see what this does. You make, you're losing money. I just don't see how this deal can work, pencil at this spot. You're going to have to see the rents go up significantly, which I don't see on here. There's a lot of inventory around this 2,400. Why would somebody buy your duplex that's similar to the single family homes? Why would they rent that? And yeah, I just think that you're way off here. And there's just no way you can make this a buy. So that's what it is. We're not writing an offer on this one. We're definitely writing it. I wouldn't suggest you do, unless you go full cash. What's that look like? If you want to just hold an asset to make some cash flow, let's see here. There you go. You can make 40 grand a year. So if you go full cash on this one, that's great. Go for it. You make $40,000 a year, you're making a 5%. That's pretty good. And you're holding on to some real estate at 2,500, 2,300, $35,000. Yeah, go ahead and pay full cash. I think you can do better than this, but you'd be okay doing that. All right, guys. Thanks a lot. See you later. Video.